Hello everyone, I hope you all are doing great. This is part 2 of section 6. Please watch part 1 of section 6 before watching this video. In this video, we will learn about withholding federal income tax using the percentage method and wage bracket method. We will also look into the situations where employees submitted new W-4 that is redesigned recently, and also we will look at the situations where the employer needs to calculate federal income tax using the old W-4 that was prior to 2020. So if you will have any questions after watching the video, please leave me a comment and I will be happy to help. If you all are ready, let's get started. The Tax Cut and Jobs Act became law in late 2017 and significantly changed how federal income tax system works. Several changes were made, including removing personal exemptions and increasing standard deduction. The IRS issued the redesigned 2020 form, and the new form no longer uses withholding allowances. We use publication 15T for determining the employee's federal income tax withholding. You might have seen the new W-4. It looks totally different from the old one. If you look at the top of this W-4, you will see that even the name is changed. Before it was called Employee Withholding Allowance Certificate, and now the name is changed to Employee Withholding Certificate. Now let's have a look at this W-4. W-4 form itself is only one page and the rest of the pages are worksheets and tables. The form is filled in 5 steps. Step 1 and 2 are the mandatory steps. So if your employee gives you a W-4 form with only step 1 and step 5 fully completed, then it's a valid W-4 form. You may not be tested on how to fill W-4 form because it is filled and given to the employer by the employee. But you will be tested on how to calculate federal income tax based on the information that is provided on the W-4 form by your employee. So it is useful to get familiar with different steps on Form W-4. As I said that step 1 and step 5 are the only mandatory steps. So let's look at step 1 first. Step 1 is for the employee's personal information and his or her anticipating filing status to determine the standard deduction and tax rates used to compute withholding. So in step 1, the employee will fill the first name, last name, address, and social security, and on step 1 part C, he or she will indicate the filing status, which is single or married filing separately, married filing jointly, and head of household. And then step 5, the employee's signatures are required, date is required, and the bottom part is filled by the employer. Now let's look at step 2. If you read the top portion of this screen, you will see that step 2 to 4 is optional and it is only filled if they apply to you, means to the employee. Otherwise, skip to step 5. So step 2 is for the employee who has more than one job at the same time, or if the employee is married filing jointly and both employees and the spouse work. So in this step 2, there is a box that is important. If the box is checked, then you have to use the right side of the federal tax tables, and if the box is unchecked, then you have to use the left side of the tax tables, which I will explain when we will do an example. Now let's look at the step 3. Step 3 provides instructions for determining the amount of child tax credit and the credit for other dependents that the employee may be able to claim when the employee files the tax return. Even though the employee can no longer claim withholding allowances, but he may be entitled to child tax credit for having children under age 17 or having a dependent. Now, for each child under 17, the employee gets the tax credit of $2,000 per year. And for each dependent, the tax credit is $500 per year. And these tax credits, they reduce employees' federal tax liability. On step 4, the employee will enter the other estimated income for the year, and that income may be from interest, dividend, or the retirement income. That is not that is coming from the employer, but it is the other income. Um, the employee will also indicate the deductions that are other than the standard deductions to reduce the withholding. And then on step 4C, there will be extra withholding amount, and that extra withholding amount will apply to each pay period. So if there are numbers on any of these, that will be taken into consideration when we are calculating the federal tax. Now, beginning in 2020, the instructions and the tables for calculating federal income tax withholding were moved from Publication 15, that is the Circular E, to the new Publication 15T, Federal Income Tax Withholding Methods. Because the employers will need to calculate withholding based on 2020 Form W4 and W4 form that were prior to 2020, there are 3 worksheets and corresponding tables describing the procedures for the percentage method. Worksheet 1, Worksheet 4, and Worksheet 5. They all use the percentage method. When I took the exam, it was indicated in the question which worksheet to use, and most questions ask for the use of worksheet 1. Here is a glimpse of publication 15T. Familiarize yourself with the starting pages for the percentage method and wage bracket method. The worksheet 1 for percentage method is on page 5 of the publication 15T. And here is the glimpse of worksheet 1 that the employer will use to calculate federal income tax using the percentage method. This is on page 5 of publication 15T. On the top you will see table 3. It shows different pay frequencies. The employer can use the pay frequency that he uses to pay the employees and then multiply the paycheck of the employee with that pay frequency, because for using the worksheet 1 you have to convert the uh, wages to the annual wages. So if the employee is paid bi-weekly, you will multiply the amount by 26 and you will convert that into the annual income. In step 1, you are seeing at the 2 portions that are highlighted in red and blue. The red portion is used when the W4 is from 2020 or later. The blue portion is used when the employer has to calculate federal income tax using information from the old W4, that is the W4 prior to 2020. Let's look at the details of the red portion first, that is 2020 or later W4. So after calculating the annual income, what needs to be done is that the employer will go on the W4 of the employee and look what amount he has given on step 4A, which is the additional income that comes from interest, dividends, etc. And he will add that amount to the annual income that he has calculated in step 1. And then he will look at the W4 4B and see if there are any additional deductions. Those will be deducted from the annual income. And then if the box 2 on the form W4 is checked, then he will enter 0, means he will not subtract or add anything. But if the box is not checked, then and the employee is filing as married filing jointly, then the employer will deduct the standard deduction of 12,900 from the annual income that he calculated in step 1. And if the employee is filing as any other status, then he will deduct 8600. After deducting that, the employer will reach at the adjusted wage amount. Now let's see how the employer will calculate the adjusted annual wage amount if he still has the W4 from prior to 2020. If the employee has not submitted a W4 for 2020 or later, figure the adjusted annual wage amount as follows. Enter the number of allowances claimed on the employee's most recent Form W4. So you will see how many allowances were claimed by the employee on the W4, and then you will multiply that by 4300 because each allowance is 4300. So if the employee claimed 3 allowances, then you will multiply 4300 by 3 to get the amount, and then you subtract that amount from line 1C, which is your annual income, and that's how you will calculate the adjusted annual wage amount. And then move on to step number 2. And step 2 is where the employer actually calculates the federal income tax for the whole year by referring to the tables that are in publication 15T, and the tables start from page 6. It's very important to be on the correct side of the table when calculating the FIT. The right side of the table is for the situation where the employee has checked off the box on step 2 of the W4. And if the box is unchecked, then the employer will use the left side of the table. So that's the difference. But you will see that in detail when we will do the example. Step 3 is after calculating the federal income tax, then you will see if there are any tax credits that the employee is taking, and that information comes from step 3 of the W4. So check the step 3 and see if the employee is claiming any child tax credit or the dependent credit. Subtract that from the federal income tax that you calculated in step 2. And that is what the employee will owe as the federal income tax for the whole year. Now after step 3, after calculating the federal income tax, you divide that by the number of pay periods so that you know how much will be deducted from each pay period. And after doing that, after getting the federal income tax for each pay period, you see the W4 step 4C to see if any additional amount needs to be withheld. And you will add that to the federal income tax for each pay period, and that is the amount that you will take out from the employee's paycheck. Now here are all the steps that you will need to calculate the federal income tax. You can pause the video and have a look at all the steps, and then we are ready to do the example. Let's do one problem together. In this problem, the employee has given 2020 W4. His filing status is single and he is paid semi-monthly $1,100. Step 2 of the W4, the box is unchecked, and on step 3, he is claiming a dependent, so $500 tax credit. And there is also the amount on step 4C, which is $150. That's the additional amount to withhold per pay period. So you calculate the federal income tax to be withheld from each paycheck using the percentage method, worksheet 1 on page 6 of the publication 15T. Step 1 is determine the annual wages. So if hourly or overtime, multiply the pay period wages by the number of pay periods. In our example, the employee is getting paid semi-monthly $1,100. So the annual pay will be 1,100 times 24 is equal to 26,400. In step 2, we will add the additional income and also subtract the additional deductions, and that information comes from step 4A and 4B of the employee's W-4. We are not given any additional income or deduction, so we will not add and subtract anything in step 2 and 3. Now the next step is step 4. If the box in step 2 of the W-4 is not checked, then subtract 12,900 for married filing jointly and 8,600 for all other statuses. If the box in step 2 is checked, do not subtract anything. In our example, we are told that the box is not checked in step 2 and the employee is single, and the W-2 that he has submitted is from 2020. So we will deduct the standard deduction from our annual income. Annual income was 26,400 and for single the standard deduction is 8,600. So we will subtract that and we are left with 17,800. This is the annual wages subject to federal income tax. In step 5, we will calculate the federal income tax, which I'll show you in a minute. So calculate the federal income tax using applicable percentage method table starting on page 6 of publication 15T. The left column for unchecked step 2 box and right column is for checked step 2 box. Use the left column because box was not checked in step 2 in our example. And also make sure that you are under single or married filing separately section. Once you know on which row the employee's adjusted annual income is, then you are ready to calculate the federal income tax. And here is the table that we are going to use. It's on page 6 of the publication 15T. Here on this table you are seeing the two columns that are in red and blue. The red is used when the box on step 2 is checked and the blue side is used when the box is unchecked. In our example, the box was unchecked and we know that the filing status of our employee is single. So we will look at the portion that says single, married filing separately on the blue side. Then we will find where our income sits. Our income was 17,800. It sits in row 3 of the single, married filing separately section between 13,675 and 43,925. Once you know which row you are going to use, you will start working backward. So to that 17,800, we will subtract the 13,675, that is the last number on the third row. And then we will multiply our answer with 0.12, which is the 12%, and we get $495. To $495, we will add 987.50 and we get the total federal tax of 1,482.50. That is the federal tax for the whole year. Now the next step is to subtract the dependent deduction amount. This amount comes from step 3 of the employee's W-4. This amount will reduce the annual federal income tax calculated. So once we have calculated the annual federal income tax, we will deduct the tax credit, and in our example we are given $500 of the dependent credit. We will deduct that from 1482.50 and we are left with $982.50. That is the annual tax due after the tax credits. Now we will divide that annual tax due with the number of pay periods. In our example, we are told that the employee is paid semi-monthly, so we will divide 982.50 by 24 and we get $40.94. This is the amount of tax due per pay period. Then we'll go back and look into the W-4 of the employee to see if the employee wants any additional amount to be withheld. This info comes from step 4C of employee's W-4. The additional amount gets added to the per pay period tax amount. So 40.94 cents plus 150, that's the amount that is given to us, is $190.94. This is the total federal income tax that will be withheld from employees' paycheck per pay period. Now the example that we just did was based on the W-4 that is from 2020 or later. Now let's look at another example in which the employee still have the 2019 W-4 and he is single and claiming 4 allowances. Again, the employee is paid semi-monthly $1,100 and he wants additional $150 to be withheld per pay period. Now step 1 is the same, determine annual wages. So we will multiply 1100 by 24 and we get $26,400. On the previous W-4 that was prior to 2020, there was no place where the employee could tell us any additional income or deductions to be withheld. So we are not going to do step 2 and 3. Now, prior to 2020, the employees would claim exemptions on their W-4. In our example, we are told that the employee has 4 allowances. Now, that is different from what we did in the last example. Here we are given the allowances and the amount per allowance is $4,300. So we will multiply $4,300 with 4 and we get $17,200. If the W-4 that we are using is from 2020 and later, then we are not allowed to deduct any allowances. Then we will deduct the standard deduction. But here we are given the 2019 W-4 info, so we are deducting the total allowances from our annual income. Our annual income was 26,400. From that we will deduct 17,200 and we are left with $9,200. This is the annual wages subject to federal income tax. Step 5. Calculate the federal income tax using applicable percentage method. And now we are going to use the tables and we will calculate the federal income tax. So $9,200 is our federal tax income and we will go on the tables and do the rest of the calculations. So our $9,200 federal tax income sits on row 2 of single married filing separately, that is on the blue side, and we will start working backward. So $9,200 minus $3,800 give us $5,400. 5,400 times 10% is 540. 540 plus 0 is again 540. So our annual federal income tax to be withheld from the whole year is $540. Now let's look at rest of the steps. We will divide 540 by 24, which are the number of pay periods in a year for this employee, and we get $22.50. That is the amount of tax due per pay period. Step 8 is to add any additional amount. Here we are given 150, so 22.50 plus 150 is $172.50. That is the amount that is going to be withheld from his paycheck every pay period.